This is our Forex blog for January 18, 2011. One of the easiest ways of trading, in my opinion, is to use our currency meter. Find the strongest ones and buy them versus the weakest ones. Today, and starting even last night, a couple hours before midnight, the dollar was super weak. The weekly and monthly trend are down. Most traders trade the dollar versus the other pairs on the bottom, or they trade the yen versus the other pairs on the bottom. So at 1 o'clock, the euro was extremely strong, and it had shifted its weekly trend to up. The monthly trend is slightly up. So you're looking basically to buy the strong euro versus the weak dollar on pullbacks or sideways consolidations. So here, a couple hours before midnight, the dollar was getting weak. The euro switched from underneath the hourly to above it, and that's a sign of a likely uptrend. And the first trade I would have taken was buying this breakout above the 50-day moving average, because it was found support there yesterday, had a false breakdown down. The momentum on the way down wasn't that much, and so when it breaks down from below to above, when it breaks out above the hourly moving average, that's a great trade, especially when the weekly trend was up and the monthly trend slightly up. So you have a great trade right here. The market kind of goes sideways. You might want to put your stop underneath here. You might have got stopped out a few hours later for about a 25 pip move, and then you have a perfect flag pattern right here, and the Fibonacci area right here is a very high probability likely profit target. Once the fib level gets broken, that's a major sign of strength, because usually the markets hit these fib levels in reverse. So I would have probably got out of my trade here at the upper containment band expecting a pullback back down, and it never happened. You have another flag pattern right here, and usually above the upper fib levels, or the upper white containment bands, the market kind of runs out of steam, so you want to draw your fibs on those. And most of the time, the first and second fib target is going to be the maximum profit. Here it hit the previous week's high, and it looks like a monthly pivot level, previous day's high. I would have got out of half my trade here with only 25 pips, and then trailed the stop. It came up to massive resistance above the upper containment bands, likely to reverse, and you can see it did not have off the charts strength. So you would have got out of the second half of the trade with about 50 pips. So let's say 25 pips on the first half, 50 on the other. You netted 37 pips on that trade. This trade right here gave you about 40, and this breakout trade right here, you might have got into it and stayed in it all the way up here for about 50 or 60. Last night, anytime you see a narrow range pattern and it breaks down underneath the lows, when it's underneath the hourly, it's a good short. And you might have got stopped out, and the second trade you got in here, you might have made 20 pips. Let's look at some of the other very high probability trades. The pound yen was very strong today, and there's quite a few good trades in this pair. Notice the daily, weekly, monthly trend very strong. Notice the prices above the hourly. That's a good sign of the market going up. We also have a narrow range 4 inside bar right here on the 4-hour chart. You can be watching a 5-minute chart and notice patterns off of longer term 4-hour charts, because our tools are multi-time frame. You want to buy the breakout above here because it's above the hourly, and also the added bonus of the weekly and monthly trend is up. The only downside of this breakout is you have the previous week's high right here as major resistance. If it breaks through that, the next level is pretty decent away. So if you took this trade here and it kind of went up, you want to get out of your trade here. It pulled back, and you have a nice little pullback, sideways consolidation breakout, and it just exploded. Usually these breakout trades happen in the direction of the weekly and monthly trend, and you have about an 80 pip move right here because it just exploded through all these resistance areas. Notice my Fibonacci profit target level. I draw these every night, spend about 45 minutes so that you don't have to, and anytime these levels are beyond the upper and lower containment band, usually you have huge continuations. That's a great place to get out of the trade. And another perfect trade on here is Elliott 2-wave fib pullback. Anytime you have an explosive trend like this, a 2-wave counter trend move down, getting rid of all the people that are selling, once the selling dries up, especially once the down move doesn't have that much weakness in comparison to the strength, great place to get in, and a nice 50 pip move. I might have got out of this at the upper containment band here, and some traders might have bought this next pullback and got that one as well. Great trade. I'm going to focus today on some of the best and highest probability trades. Euro yen had some good trades too. The weekly monthly trend's up. Notice it broke above the hourly right here. If it came up to the hourly and went sideways for a while, then broke out, I would have went long. In this case, it broke out, then it proved to you it wasn't coming back down. This is a very high probability trade. And you might have got out of half your trade here, and then you draw your fibs on this, and you look to get out somewhere up in here on the second half. I probably would have missed the remaining move up. If the weekly monthly trend was down, you might have wanted to sell the double top here at the fib level. Notice how well the fib level worked here. Unbelievable. CAD yen, also the fib level I drew was a very good place to take your profit target. New Zealand yen, notice how the fib level had resistance last night. They were selling, 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 selling. Now you may not have wanted to get short right here because the weekly and monthly trend's up. However, if you were trying to buy the lows down here because there wasn't that much weakness on the way down, the longer term trend was up, this makes a great place to get out of the trade, with a profit target. These fib levels also make, finding new trends very high probability. In other words, if you have a fib level right here, usually the market's going to find resistance like it did right here and then go down. If it doesn't, once it goes back above this, it's a very big sign that the trend's likely to go up. So you might have taken some trades on here. Notice my Fibonacci profit target nailed the high to the pip, and you also have an Elliott two-wave pullback after the first move up. Fib targets and the gray fib levels, once broken, tend to become support, and that's also another reason why this was such a good trade. Notice the trend on the way down was not that weak. Great place to get in. You didn't get rich, maybe found a 20 pip move, but it's still very high probability. Here's one in the dollar Swiss that shows the same thing. Notice how it acts as support. In this case, the weekly trend's down, the monthly trend shifted down right around here. The longer term trend's down. Notice also earlier we have a narrow range, two narrow range patterns. When it breaks down, you have an absolutely huge 70 pip drop down, and you might have also sold this little up move right here. And once it's breaks underneath this fib level, it's going to act as resistance on the way back up. Great place to go short, given the fact that we had incredible weakness. This is our trend explosion system. You go short right here. You didn't get rich on the second trade. Notice it's underneath the lower containment band. Notice it double bottomed here with half the weakness it had before. This is one of our counter trend methods. And on top of that, my Fibonacci profit target level, which is what I anticipated the low today being. That's why I draw these pretty far away from the previous day's range. Anytime they're underneath the lower containment band and the momentum isn't that much underneath the white lines, very high probability counter trend trade. I would have taken this trade myself. Usually they work their way back up to the hourly. I might have got in this one here with a very small profit, came back down again. Notice there's not a lot of weakness like there was earlier, and then the market exploded up about 80 pips. Phenomenal trade.